Hey everybody, welcome in. Noe Fibonacci here, Forex, crypto, commodity, and stock trader. I specialize in pattern recognition, so I trade things like chart patterns and candlestick patterns. So today I'm going to be going over a rare reversal candlestick pattern called a bearish breakaway that you will be able to put into your bag, to put into use into the markets, and to make a profit. Now, reversals can be tricky, so I will also be going over the tools necessary to identify, the indicators needed to confirm, and the strategy required in order to engage this reversal pattern. So to start, what is a bearish breakaway? Now, a bearish breakaway consists of 5 candlesticks, okay? 5 candlesticks right here are outlined by the rectangle tool. Now, these 5 candlesticks can be broken up into 3 parts. The first part consists of the first large bullish candle. The second part consists of 3 smaller bodied bullish candles. Now, these 3 candles have to follow a certain rule, and that rule is that each of these candles closes, okay, must be contained within the following candle body. Now, the closes I am talking about are here, here, and here. Now you can see all these candles closes are contained within the following candles body. Now that rule is met, part 3 is complete. This should be the part of the formation of the pattern that should tip you off. Now the final part, part 3, is considered the confirmation candle or a large bearish candle. Now, this candle also has to follow a certain rule. And that rule is on the close of this bearish candle, this candle has to engulf all of the 3 previous candle opens. Okay, so first it was the closes. Now this 5th candle must engulf that open, this open, and this open. Okay. So you can see on the close of this candle right here, price closed at 1.62283, and this dotted line in fact does end up below this open. So rule 3 is met, confirmation candle is complete, and this completes the reversal candlestick pattern. Now, a few of the indicators that can give strong tells with added confluence can greatly increase the confirmation of the formation of the pattern. Now, a few of those indicators are going to be volume, is going to be the RSI, and the MACD. Okay, so to start, we'll start with the volume here. So you can see on the formation of this pattern, as price, these first 4 candles with price moving higher and higher, you can see that volume here on the first candle is at the most during the formation of the pattern. But as price moves up, volume is actually diminishing. Okay. Now on the 5th candle, the confirmation candle, you see volume really start to increase. Okay, so that right there is one confirmation from an indicator that can help determine you are actually seeing the reversal in real time. Now, next, the RSI. Now, the RSI, I would like to point out, is giving a bullish divergence. I'm going to go ahead and take my trend line tool here, go for it. And if I go from this high on the RSI to the current high where price is, where we're talking about right here, you can see that this trend line is moving down, showing a bullish divergence, even though price on the chart is giving us higher highs, okay? So right there, the RSI is giving us another bearish confirmation. And on top of that, you can also see during the formation of this reversal candlestick pattern, the MACD is creating a crossover event where the signal line is coming over the MACD and they're both falling down towards the zero. And we are also getting we're starting to get the generation or the production of bearish bars or red bars here on the histogram, okay? Now, the strategy that is needed in order to trade this particular reversal, after the completion of the 5 candles, you get the close of the 5th candle engulfing the 3 smaller bullish candles, and you have gone through the confirmation of your indicators. On the open of the 6th candle, so the candle that opens after this confirmation candle is going to be the entry, okay? So we'll go ahead and take a line here. Let's go ahead and actually move it forward. You can see price here. Let me go ahead and get rid of that. So we're going to go ahead and we would have opened an entry here. Okay. Entry. Our stop loss would be above the high of the pattern. Okay, so if I remove my trend line here, we can see that our stop loss would be set somewhere about here. All right. And then the take profit would be the very next area of support. Now, if we look, there are a couple areas that we can take. So if you are, you want to go the conservative route, you could aim for this low here. If you want to be a little bit more aggressive and hold the trade longer, you can close up positions, but then also hold until the next support level here or the next support level down here, okay? Now, take profit is up to the trader's choice. So that is the strategy that you would use in order to trade this reversal candlestick pattern. Now, if we go ahead and play the markets forward to current price, you can see that price does give us a serious drop, and the stop loss would have been safe above the highs of this reversal pattern. So again, we can see here price actually did cut all the way down to this lowest area of support that we pointed out. If we pull up the indicators, our volume continued to increase as price continued to fall. The RSI dipped down below the 50 And you can see here on the MACD, we have separation between the signal line and the MACD after the crossover event, and a serious production of bearish bars. So these are some of the ways that you can confirm a bearish breakaway. And so, like I said, reversals can be tricky, but if you have a proper, if you get the proper confirmation and use the proper strategy, the bearish breakaway can be a very profitable tool to have in your bag. So for all things currency, keep it current with Noe Fibonacci. Thanks for joining. I hope you guys learned some. Have a great day.